15 years ago, Fidelity China Special Situations listed on the London Stock Exchange, a new investment trust designed to give investors broad exposure to China's remarkable but still emerging growth story. I remember it well, late nights writing the prospectus and a great advertising campaign. Bolton to Beijing was a great catchline. The world's second largest economy, China has evolved over that period from export-led growth to domestic consumption and technological innovation. During those 15 years, the average income of each Chinese citizen has more than doubled. Well, I'm joined today by the Trust's founding manager, Anthony Bolton, and his handpicked successor, Dale Nicholls, who's managed China Special Situations since 2014. Welcome to you both. Thanks for joining me.
Good to be here.
So, Anthony, let's start with you and travel back to the launch of the Trust in 2010 when we shouldn't forget you'd already enjoyed a successful investment career managing UK and European funds for Fidelity, including Fidelity Special Situations. So what inspired you to put off retirement, or I suppose come out of retirement, and venture into the relative unknown of Chinese shares?
Okay, so it's quite an interesting story, and I actually need to take you back over 20 years. So in 2002, our chief investment officer, Simon Fraser, came into my room and he said, Anthony, I'm supposed to be going on a trip to China the week after next, but I now can't do it. I think you should go. And I sort of looked at him. I said, Simon, I run European money. Why do you want me to go to China? And he said, look, I think you'll be really interested in what you see. And secondly, I think if you know a bit more about China, it might help you with your European investments because they compete with each other and some of the European companies were selling into China. So I went. And to be honest, I spent a week there and I was bowled over by what I saw. It was just such an exciting place. Obviously, things were less developed at that stage, but things were developing rapidly. And I came back after that and I thought, I really want to get to know more about China than most investors in Europe. And the Special Situations Fund, the UK one that I was running, was allowed to go 20% outside benchmark. And I put about 10% of it into Chinese and Chinese-related stocks. And I started going to China twice a year. Then I stopped running the Special Situations at the end of 2007. And I did a role mentoring younger fund managers and analysts, and I did some public speaking and writing, etc. And I did that in London for 18 months. And then I said to Barry Bateman, who ran Fidelity at that stage, I'd love to go and do the same thing in China, and he's, in Hong Kong, but for Asia in general. And he said, fine. So I went out for 3 months to China and I started to see these Chinese companies coming through our Hong Kong office. And after a month or two, I sat with my wife one evening and I said, I said I wanted to retire. How do you feel if I delayed my retirement and I ran a Chinese fund? And she said, whoa, that sounds quite exciting. And luckily she liked Hong Kong. So I then went back, I discussed it with the person running the Hong Kong office. I then went back to Barry. I think he was quite surprised because he'd sort of written me off as doing anything, continuing to manage. And we had a discussion and we actually looked at 3 different forms of trust. We looked at, could it be an open-ended mutual fund? Could it be an investment trust, or could it even be a sort of hedge fund type structure? And I argued strongly for the investment trust. I'd already run from scratch 2 investment trusts. We ran the Special Values and the European Trust. And I felt in a market, China is a very sort of hot coal market. People love it or they hate it. And the trouble of having an open-ended fund, you were going to get all the money redeemed at the bottom and you were going to get all the inflows. And I think an investment trust really works well, and particularly for the type of companies. I wanted to buy a lot of private companies, medium and smaller companies, not the big state-owned enterprises, which I thought were less interesting. And I thought, therefore, an investment trust was ideal. And that really is how it came about.
So you mentioned a couple of times there the differences between
Yes.
China and what you'd been used to in the UK and
Yes.
Europe. So how did it feel different investing in China?
Yeah, it's interesting. I think a lot of the basics are the same. But as in any emerging market, the quality of the people and the quality of the information you were being fed is terribly important. So, my first question is, can I believe what I'm being told? And that wasn't always the case. But after that, one of the things that really excited me about investing in China at that time, I could find quite a lot of businesses similar to businesses I'd invested in Europe. But they were growing faster and they were on a lower valuation. And someone who's very focused on valuations, that was really exciting. I think the other thing I should just say, some people sort of say, well, Anthony, did you make was China because you thought China was better than India? And that wasn't the case. It was because of this background. China was the one market that I had started really to know in depth and knew the companies. And that's why I wanted to do China.
Great. Okay. So then 2014, 4 years later, you returned to the UK and you handed the baton on to Dale. So Dale, let's cast back 10 years to 2014, 11 years now, actually. Obviously, big boots to fill. So how did you think about coming into that investment opportunity? How did you think about it? And how have you, how did you differ from Anthony's approach, and how have you evolved that over time?
Yeah, well, it was definitely an exciting opportunity, and it was my first time to run an investment trust. So all the things that Anthony just mentioned, the attributes, were something that I really appreciated. In terms of the basic approach, I mean, we've been at that point spent a lot of time in sort of meetings together and that sort of thing. So I think the basic approach, was very much the same. Looking for great companies. I think we're tended to be focused on new China, so the areas that we knew were going to be bigger parts of the economy over the time, the consumer, technology, healthcare, these types of areas, which I think set us quite different from the market at that point, because I was looking back at the stats. It's basically, the makeup of the market, I think, if you looked at IT and consumer, they were probably 20% of the market, and 90% of the market were SOEs. Now that's changed a lot.
State-owned enterprises.
Yes, exactly, state-owned companies. And so I think the benchmark has definitely changed over time. If you look at the benchmark now, probably the SOEs are less than 30%, in terms of market cap of the market. Those two sectors are probably 60, 70% of the market. So, the makeup of the market has changed. Obviously, we've had the creation of whole new industries. So, the way the industrial sector has developed has just been incredible. If you think about the EV sector, it wasn't even there. The likes of ByteDance and that sort of thing. These companies that have appeared in the private space as well, which are, probably, some of the fastest growing companies of all time. So I think, the structure of the economy, the structure of the market in particular has changed. But in terms of the basic approach, finding great companies, particularly private companies, that we just think have great growth potential and represented good value, and obviously really strong management team.
Do you stay in touch with China, Anthony? I mean, do you follow it closely now, or do you still see it as a good investment opportunity?
Okay, so I don't follow investments as closely when I was doing it day to day, but I'm definitely still in touch, and particularly at a sort of macro overall level. And yes, I've been specifically saying that I think now is an exciting time to be invested in China, because it's one of the few markets in the world that isn't near its high. And I particularly have compared China and America, because America, is at its peak. The shares have done amazingly well, obviously anything connected to AI. And I just feel that hasn't rubbed off on China. And you get these big disparities, similar companies like BYD versus Tesla. BYD sells about the same number of cars, but I think it's a seventh of the capitalization. And then Amazon and Alibaba, they're different companies, but Alibaba is about the 10th of the capitalization of Amazon. And I think that that will close. Now, it might close partially by the American stocks coming down, but no, I think it's a very interesting time at the moment. There are always challenges. This is the thing that people think when they look at markets, they say, well, what's the outlook like? And to me, that's not the most important. The most important is what outlook is discounted in current prices.
In the price.
And a gloomy outlook is discounted in prices in China. And I think that's an opportunity.
Is that what you think, Dale? Do you think this is a valuation opportunity as much as anything else at the moment?
No, absolutely. That gap that Anthony referred to is definitely there. We see it, constantly. It's really across a range of sectors. We see, you can take companies and, basically if you put them in another market and sort of presented that same growth opportunity, would be trading at much higher multiples. So it's definitely the case. Sentiment towards China swings significantly. If you just think about, the past 10 years, you go from sort of ambivalence to euphoria to, a year or two ago, we were talking about China being uninvestable. And I think we've passed that point. Very few people are saying that now, but still, there's still a lot of skepticism about the market, which I think does stand in contrast to some of the Western markets for sure.
I suppose it's interesting, isn't it, that you've both managed the same trust in the same country, but the context is totally different. I mean, I remember when we launched the trust 15 years ago, there was a huge amount of excitement about the Chinese opportunity. And then, as you say, Dale, we've been through ups and downs since then. How, Anthony, how would you see the sort of structural changes in the Chinese market over that time?
Well, I think Dale's already touched on some of these. The domestic economy, it was so dominated by exports in the early time that I was running the fund. And now the domestic economy is the most important thing. And I think just because it's such a big economy and it's so important, and that's why I think all investors need to consider some exposure to China. What else has changed? Obviously, I think the quality of information and the availability of information, as everywhere, has changed a lot over the last 15 years. And the competition has got tougher, I would say as well.
Yeah. So looking back, Anthony, I mean, how do you feel about the legacy, if you like, of Fidelity China's special situations? Has it been all that you hoped it would be when you set it up in 2010?
Yes, I mean it's a volatile market, as we've already referred to, and there was a difficult patch about 18 months after I started the fund. But if people stuck with it and then stuck with the fund when Dale took over, one stage the fund was up, they would have made nearly 5 times their money in it. And today, the prices have come back because China has been out of favor, and that's the opportunity in my mind. But I think people, or at least I hope they feel it's been a rewarding experience.
And Dale, as you look forward to hopefully the next 15 years of the trust, what excites you about the years ahead?
I think what's important to focus on is the companies, and there's just a great dynamism amongst the companies on the ground. So, we've seen massive innovation over that period. I think that's likely to continue. That's probably the thing that stands out. Again, if we sort of, in terms of the environment and the way people look at the market, I think one thing that's different is obviously geopolitics is probably even more of a factor than it was. Domestic politics as well is something that people focus on, but my sense is that's overly focused on. Again, if you look at the companies, the dynamism, the potential opportunities, even domestically, even in a slowing economy, I think that's what's special. I think the other thing that, again, has changed is just the capital return from companies as well. That's something that I think is very underappreciated, levels of buybacks, dividends. As you probably know, over the 14 years, we've increased the dividend every year. I think we've compounded the dividend at close to 30%. So, we're not an income fund, but, I think that's something, an element that, hopefully people will, begin to appreciate over time. And as companies execute the earnings come through, again, I think there's good potential for that China discount to close, versus other markets.
I mean, Tom, I would say on management, I've met a lot of management over the years in different countries in the world, but these, as Dale says, are some of the most dynamic and adaptable managers I've ever met. If things change, they change. So, great worries obviously about the tariffs and everything, but the companies are so good at adapt. I always said, if they made bicycles and bicycles went out of fashion, they'd change to toothbrushes or whatever. They're not stuck in their ways.
Okay, brilliant. Let's just wrap up with a few quickfire questions for both of you then. So what was the first stock you bought in China, Anthony?
Yes, I was trying to remember the exact one. The first one actually before even the trust was launched, I think was Hong Kong Exchange, the Hong Kong stock market, because it seemed to me that was a very good way of participating in the growth of China as more listings came along. In the trust itself, actually, one of the first I bought was Tencent, which I'm delighted to see is still in the portfolio today.
Yeah, and Dale, what was your first stock?
Yeah, I mean, I don't remember exactly. It was probably an SOE to start with, but for the first, real position of size, it would have been the likes of a Tencent, maybe a NetEase, a Trip.com. Those types of businesses would have been one of the early ones for sure.
And Tencent's obviously been a good one. Was that the best investment you made, or have there been other even better ones?
There was a good ones. I was very lucky to be able to invest in Alibaba when it was private, before it came to the market. And then Dale took over when it became public. And that was a great story at that time for the first few years of it. But, there were a number. There was the mid-size hotel company, whose name I forget, but I invested very early on.
H-World is what it's called.
Yes, that's right. And that over the years, I think, has done really well.
Yeah.
So if you found a sort of niche that and you bought, the best company in that niche in a market that was growing, it's really interesting.
And Dale, what's your best?
Mine is a company called China Meidong, which you will have remembered. So, actually an auto dealer, but incredibly well managed. A great portfolio of brands, and I think it's just really leverage that sort of growth of the consumer.
I remember going to visit it, even I think before you did, Dale, and they had the best quantitative system I'd seen in a dealer for deciding how much stock to hold, what pricing, what discount they would give on cars. It was really impressive.
Yeah. And Tao is still very much in control of the business.
Is he?
Even today.
Yeah.
So we started off talking about the sort of, your first visit to the region and the excitement of it. So, let's just finish. What's your favorite place to visit in China?
I have to say, I think the Bolton in Shanghai, every time I go there, particularly you go at night and you see all these lights, there's a buzz. It's got a real buzz.
Absolutely. Well, I was lucky enough to come out to Shanghai with you actually in 2012, and we had a very nice meal on the Bunt upstairs somewhere. It was very nice. Dale, your favorite place?
I obviously love Shanghai as well, but I particularly like Hangzhou. So obviously some great companies have come from there. There's a real dynamism, but there's also, it's actually really beautiful. There's a lot of green. And if you get it
with the lake, isn't it?
Yes, exactly. I was going to say, if you get
lake,
a morning run along the lake is fantastic, and great food, etc. So particularly like Hangzhou.
Great, Anthony, Dale, thank you very much. That's all we've got time for. Thank you to Anthony and Dale for joining me to share their memories of the past 15 years and some fascinating insights into the Chinese market of today. And thank you for watching. If you'd like more information about Fidelity China's special situations, please do visit our website. Goodbye.